Happy New Year, everybody.
2022.
2022, please be better. Can we all agree?
It's going to be better. It's going to be better.
That's some good stuff coming up.
I hope so, man.
We got some good stuff coming up.
Yeah, high hopes. There's a low benchmark to beat 2021 and the year before that, 2020. So 2022, welcome to the first Talkin' Tokens of 2022. Big things with this show. Obviously, we're doing our million SHIB giveaway, which details are in the comments below. And today we're mixing it up a little bit and kind of focusing on a single topic for you guys, passive income with crypto. A lot of ways to make passive income. We'll kind of detail some of them, and we'll see where the talking goes. But
let's do it.
Did everyone have a good New Year's night? Nothing.
Yeah.
I think we were
at
10 o'clock on my side.
Everyone here got COVID. New Year's is canceled. Not me, my girl did. Everyone, all of our roommates, our whole apartment got COVID.
Huh.
COVID is
I feel like that was like half of the population here in Arlington. Everyone's got COVID during New Year's.
Lots of COVID cases. Hopefully no one got too
sick,
too jacked up.
Mine was fine. No COVID, but I didn't make it to 12. That's for sure.
Yeah.
Oh man.
Not the raging New Year's days that they used to be.
No, it was dad mode. So.
All right. Well, let's see where we're at. Where are the markets at? What did Bitcoin do for New Year's Eve? What did Bitcoin do?
I mean, we're still just chopping around in the 47, 48s. Like, I think they said it's passed through 48 like 20 times in the last like couple months.
Yeah, I mean, a lot of sideways action. I think I updated the little price thing. Let me throw the price thing up there. Wow. And Ethereum was basically like $1 off where it was last week. And Bitcoin is currently down by like 1,000 from where it was in the show last week. But basically it's in this 48 to 47 area. I was hoping it would break through this little triangle thing right here.
Now we got to go down, man.
Yeah,
I go down before we go up.
So you were saying last week you still think there's some downward pressure to be had, which it kind of seems like it's doing. But I was thinking, I was looking at Ethereum, and it's got this very long trend line here that it keeps testing. Like it tested that right there today. So I kind of think Ethereum is maybe going to pull a leading position on like what might happen. It seems like, I mean, obviously everything rolls together and correlated, but it's very specifically testing this big trend line here, and then the bottom's here. So, what's going to happen between
those 2 points?
The mid-January.
Hopefully we break through and don't have to worry about that choke point.
Right. But Bitcoin still hasn't made a new lower low. It's kind of making a floor right here around this, but from what we can tell, it's like the 45 to 42 is a pretty big. That's like a pretty big number to hold this zone here if you want to expect it to go higher anytime soon. So.
Yeah, we're still holding on the weekly EMAs. So
Link is up today. If anybody's a Link holder, it's having a pretty good run going the other direction compared to some of the other things. Everything else has kind of been pretty muted. Where's that SHIB at? Let's go back to Shibby.
What was the regular stock market looked like it was doing pretty well. It looked like it had a pretty significant jump. I don't know what people are just looking to get back in,
Yeah, I mean, it's still busting out new highs in the S&P.
Yeah, that's what I'm telling you. Look at that W. It just did a giant W and then blast off.
Yeah. What are some stock market predictions you guys have?
I mean, I guess there's a lot more money in the world right now, so there's a lot more people dipping into stocks. I guess. I mean, we should see a growing economy coming out of like kind of the COVID depression if things were just right. I would think.
I think that shit's gonna pop.
I don't know. I'm thinking. I feel like I'm going to be bearish on it. I mean, it keeps going up and up, but I feel it's artificial. We already see the fringe. We already see the fringe of currencies starting to like crumble. You know, Turkey, Argentina, some of these places. I think Brazil. I mean, Brazil's at like 9% interest. Turkey's 16.
Damn, look at that line, just straight up.
Yeah, I mean, if you just put your money in, and you can see the big W down there. You know, so it's just like it does this doing, double bottom, and then blast off. So I don't know. I think I'm just being more cautious with anything that has to do with fiat, just because we just keep printing, money. So I'm hedging my bet on other assets.
Yeah, I think once this whole money issue pops, like the stock market is going to come crashing.
Right. I think it's going to pull the plug. I mean, it's going to just like, and then. Before you know,
it's going to bring crypto down.
Well, hopefully we can decouple from it. It's like I know people will run, or crypto will probably suffer somewhat, but at some point, it's got to, hopefully.
Crypto would bleed bad too.
Yeah, I mean, it's not completely. It's still correlated if there's a bad market.
Oh no, it definitely is. But in the long run, I think
at some point we wanted to decouple and let it do its own thing, which hopefully people will see. But well, I mean, I can't blame you for thinking it's going to come back and test one of these moving averages here at some point.
No, it's not testing shit. It's going to keep going to the moon as long as it keep printing money.
Right, you just keep keep inflating and artificially pumping up, and it's like, oh, you need money? Here's debt. The money represents debt that no one's able to pay back. So right now, take advantage of the low interest rates and just, take the money out now. And then when it starts rising, then, it's going to be an asset to almost the debt, the money you borrowed.
All right. So let's get back here on topic.
Passive income.
So we're all talking about buying, obviously you buy the crypto and you hold it just like any other asset. You hope your asset improves in value, but there's ways to make money on top of making money. Either, I guess we're talking passively here, so not actively going out and making active trades and stuff. So how do you, what's an example?
Sounds like John's actively eating a tray of like cookies.
No, I was putting my cheese away.
Oh, okay. Hopefully you didn't cut the cheese.
Right.
Nah, not today.
Right, so, first goal, passive income, is to create and set it and forget it revenue. So you want to buy something and it makes money for you. How are we, what are the ways we're doing that? And there are a couple different ways in the crypto world. Some are kind of built in and some are, a little bit more, you have to go out and get it kind of thing.
Right.
And it kind of depends on what kind of money you have. So,
right.
A whole bunch of money.
I mean, what's top on the chart is kind of like POS, like proof of stake, right? I mean, isn't that
staking is a big one. A lot of these cryptocurrency coins, tokens you can be a validator. We've talked about this on the channel here a lot, but staking is part of the process of validating the transactions or participating in that. And if you hold the coin, you delegate your coin to a particular validator, and then that validator makes interest off of those transaction validations and disperses it to the delegators. But so, Mike, are you staking any coins right now?
Yeah, I have in the Exodus wallet. I think I have Solana and I have ADA.
Right. So I think it's important to know that, like, when you're staking specifically for Solana or ADA, those coins don't actually leave. I don't think they actually leave, at least specifically for ADA, they don't leave your wallet. You're just delegating it. You're just pointing their rights kind of to the delegator. So, for example, if we'll talk about it later, but like an earning program where you're sending your Bitcoin or whatever you want to someone else to make money on in loans, staking in that example is never actually you still hold the private keys. It's still in your wallet, in your Trezor, or wherever you want to have it.
They can't hypothecate it.
Right.
Rehypothecate it.
So it's very secure in the sense that it's not being delegated to some exterior organization or that you need to worry about. Exodus is a good example of a wallet that allows the staking integrated into the wallet itself. Makes it pretty easy.
Right, that's nice feature to have. The validator, you have to have some pretty big funds to, remember like H&T was like 100,000, I think, or something like that, or like no, 10,000 H&T.
I think it was 10,000 H&T. Yeah.
Right. ETH is 32 minimum.
Yeah, I think ADA is technically 0, but it's like weighted in the sense that you'll never get a vote and you won't make any money if you don't have enough. So like you make more when you have more, but there's technically no entry to, or no barrier to entry.
So you almost have to it's like a YouTube channel. You could get it going and be like, hey, delegate to me, give me money. And then if you just had this giant pool of people trusting you and giving you the money, and then you can vote on their behalf.
Well, they don't need to necessarily trust you because you can't spend their money, but they.
Well, why would they trust you with the decisions you're going to make for the network? What if you're just like an a-hole and you know what, I'm going to do everything opposite of what everybody else wants to do. But since I have a lot of money, that's one of the reasons that proof of stake can be kind of coerced, or you kind of be forced into something.
You're talking about the benefits of the voting.
Well, yeah, the benefits of the voting and how it's weighed through the amount that you're putting in.
I think that depends. I think that depends on the coin because, again, I know a lot about ADA just because I have a lot in that, or I've experienced that the most. You can still vote with your coins outside of the delegation. So I'm still like a primary voter in the terms of where the coin is going, like for rules and tokenomics and stuff.
Yeah.
Outside of who I'm staking to.
Yeah, I guess just validation could be a thing of power, and then people can kind of maybe use that to sway the network. But that's a side topic, really.
I'm sure there are some coins where they give voting rights to validators more so than to delegators.
Oh yeah,
I'm sure what you're saying is
if you're validating the transaction, you kind of dictate what goes on on the network.
But here's an example. If you want to be like, okay, well, how much money could I make staking? So if you go to stakingrewards.com, this is a good little website for passive income staking coins. It's talking about, we've already touched on a couple of these: Solana, Ethereum 2.0. So Ethereum, the original Ethereum 1.0 is proof of work, so that you cannot stake on Ethereum. But the new one coming out, 2.0, will be proof of stake. And obviously that's not active yet, but you can get into it right now if you have and Mike said it earlier, I think 32 Ethereum to start staking now. And I think the rewards right now are 5%. So you want to hold on to your Ethereum in your wallet, or do you want to lock it into the proof of stake? So again, some of these, just be careful. There are lockout periods as well. So
right, once you put it in that for Ethereum, I think it's
Ethereum 2.0 is permanent.
Right, whenever, right, whenever once it launches, then you may have access to them. It's but until then, it's locked until, and it's been delayed. It's been delayed quite some time now. So,
right. So some of these coins have lockup periods. Like Cardano, I think is not locked up. Solana, I think, has a 4-day lockup period, at least 4 days in the sense that you can't, if you request it, I think it takes.
Yeah, or it takes 2 network days maybe, or something to
up to 4 days maybe.
Right, to release it. But they do have, I guess, third-party Ethereum staking services that you can that you can deposit as little as like 5 Ethereum to start making interest. So it's like
but that would be that's kind of like
more like an interest account, or I guess third party
or something.
Yeah, somewhat.
I guess your smart contract set up so that you can all participate in the single validation 32 ETH, but then you're getting a piece of the pie, but you're trusting whoever you're giving it to, which is
right. Somehow they're pulling your funds, right, with other people.
So just
it's almost like liquidity.
Most of these things, your coins don't actually leave your wallet, so just be careful. Someone's like, "Hey, stake with me, send me your stuff." That's not.
No.
You're using a trusted wallet from the website.
Right. Validate their certificate. So easy just to click on the wrong thing. Or, just make sure everything looks legit before you're downloading it. But then it helps support the network. Most of the wallets are like nodes themselves, so you can always get like a light version. There's probably like a full wallet, like a node, and then there's like a light wallet, which would just
right. So this website's really good. You click on the thing, it says, "How do I stake it?" Staking your Solana. How much can I make? So if you had, that's just a reasonable amount, $2,500 in Solana. Let's say for 5 years, you're going to delegate it, and you're going to allow it to compound, which I would say yes.
Yes, yeah.
So your total reward, 35%, you're going to make $154 a year on $2,500.
Not bad.
And
it's just nice to be able to, like, if you are just kind of stacking that coin at any particular time, and then it's going up, you're getting paid the staking percentage. It's fairly safe. I mean, that's probably one of the safest passive income methods.
Yep.
Without relinquishing your privacy or your property.
And I think it's going to become more and more. I mean, all of the proof of stake coins, which is kind of aside from Bitcoin and some of the other players that we've talked about, most of the newer coins are proof of stake because of the energy. And I guess they talk about some security. It opens it up to more people. But staking.
Yeah, I like to compare staking to what most people consider passive income is like real estate, right? By the way, I had my mic on mute this whole time, so
I was gonna say, like, were you like talking or
yeah, no, I actually had my mic on mute the entire time. But no, I want to chime in and say, most people associate passive income with like real estate and owning rental properties. I kind of see staking as kind of like a good analogy to it. Obviously staking has a lot more nuances, and every blockchain's different, but it's like you're kind of letting your resource, your property, go to work at something and offering like a service to someone else, and you get money back in return, you get value back in return, and at the same time it appreciates, kind of like what real estate does. But obviously, if you think cryptos are kind of the way of the future, obviously the upside is the appreciation of the token, obviously. So that's why I think a lot of these crypto tokens are a lot better investment than real estate. I mean, you don't have the tax advantages of real estate, but the whole tax thing's still being figured out.
Maybe at some point you might.
Right. I mean, if you're buying and selling it and flipping it, it's probably not as bad. I mean, there's a cost with that, but that's just part of, like, takes out of the bottom line, I guess. If you're renting it, that's a different, kind of thing, because the value of the house is appreciating, but there's still like a maintenance cost. There's no maintenance cost on crypto. Crypto is like universally, universally wanted, desired by everybody. And if you, look at like probably like a penthouse in Manhattan is only relevant to billionaires of the people that are in Manhattan, So it's like a physical location. Anything in the physical world can be taxed, destroyed, and there's certain costs to maintain. Yeah.
But the concept. I mean, there's a lot of difference in crypto and real estate, but the concept of owning something and making money off it on the side,
right? So it has utility.
You're not selling it is
right.
That's a very good comparison, John.
Yep.
So
keep your mic on.
Right. So I'd say similar to, or not similar, but kind of the same ilk. We talked about it a little earlier. Earning, so earning programs where you're lending, rehypothecating your coin to someone else in either a peer-to-peer method or a financial service like BlockFi or Celsius.
Well, I guess those would be more like interest-bearing accounts. I guess is the lending more like you're giving it to like some sort of pool or like a peer-to-peer?
I mean, I think lending is all of the above on that front because if we send our BlockFi, anytime you're sending the private keys to someone else, you're lending your.
Right, but one's kind of like a crypto earning bank account, and the other one is like centralized and decentralized.
You're being the bank. You're essentially being the bank. Like you're lending your coins out.
Well, yeah, I mean, if you're doing a peer-to-peer and it's through a DAO, right? Or then you have like the infrastructure through a third party. I mean, I guess that would be considered.
Sometimes it's third party. Sometimes it's built into the smart contract, like a DAO or whatever.
I'm just looking how this one article.
Different ways of your coin making money for you through different.
Take a look at the link I sent you. They're breaking it down and as kind of a separate deal. But yeah, I mean, maybe this will be relevant to what we're talking about.
Yeah, let me pull it up here.
While he's pulling that up, what's the highest?
It's up the same branch. Yeah.
What did you say, John?
I was going to say, while you're pulling that up, I'm kind of curious, what's the highest interest or yield you've seen for any kind of staking or any kind of program like that?
When we first saw Solana, it was like 16 to like 18% in the Exodus wallet. Yeah.
Okay. Check this out. So remember the token I talked about back in the spring, Persistence?
Yeah.
Yep.
Yeah. So guess what their staking reward is?
50.
I don't know.
Yeah, pretty close. It's like 30% or something for from now until I think 2023, which is pretty wild.
Dang. So that's just incentivizing people to come and buy the token and make money off it. Yep. While flooding money into their coin.
Right, while they're still developing their project, And I still think it's a good project.
Terra Luna was 20, right, on the USD.
Yeah, on the
UST.
Yeah, so their stable coin, you can earn through them 18.9% right now on UST.
Right, that's pretty legit. On some of when we get to the yield farming and those, when you do like the liquidity pool, I mean, it's probably the highest risk. Those are the most rug pulled. But they were like, I mean, they're insane. They're like hundreds of APR, like 200% or something. It's like some crazy amount. Like on Pancake Swap or like Banana Swap or Monkey Swap or something swap, It's like.
Well,
but then it's also rug pool. Your money's gone.
Yeah, the persistence thing is that through persistence directly, like their wallet or
on their blockchain?
It's got to be through persistence.
And then where are those coins
through
coming
their
from?
wallet?
That's just part of their tokenomics that they have a certain amount of APR to share with new earners.
Yeah, they're just trying to, give some sort of incentive for people to hold on to the token while they're still developing the project, And, I still think it's a promising project. I think the people from Matic are coaching them.
Good mentors there.
Yeah.
So I'm going to try to pull that website up. Persistence.
Yeah, I don't have any persistence yet. I've been meaning to buy some, but, it's just one of those tokens that, I've been meaning to buy, but just never have.
Right. I mean, I'm trying to get some on the Luna train. I got to do that. It had a nice little dip here, and I didn't catch it, but maybe I think another little pullback. Yeah, the big thing, in DeFi is, DAOs and just contracts, but your contract is only good as the person that wrote it.
Yeah.
So, seems like it's all hunky dory until all your stuff's gone.
So here's the persistence blog. Welcome to staking. Launched April 1st, 2021, offering 35+% for the first year. So I wonder if it goes down. So you sign into your wallet, delegate. So that's very similar to all these other coins. Claim your staking reward. You can validate it to another. You can redistribute to another validator if you want. So finding it's important for validators to find one that has a lot of uptime. So like they have to run a machine that's doing whatever they're doing. Like it's not like a super powerful machine, but it is something. You gotta have good internet. Gotta be online for your stake to make money. So
Right.
you're trying to find people that have different commissions. So like a validator could take 10% commission, or they could take 0. So there's some validators out there that just want
that just want to share, right? So you can find people.
They're trying to build up their pot, so they have less commission. So it's kind of like you're going to car dealers and be like, "Hey, what are you going to give me? Hey, what are you going to give me?" So John, yeah, this is say log into this wallet. This must be the persistence wallet built by them.
Got a comment here.
Yeah, I saw that. That's got to be like, what is? I don't even know what language that is.
It says VYN FYI.
I think it's a Russian bot.
Is that what the letters are? Russian bit letters?
Name looks Russian. It's got Russian characters in.
Yeah.
And the text is just some nonsense. It's probably just a bot.
We're trending in Russia. Woo. All right. So yeah, I mean, great example, John, that there are opportunities out there for you buy persistence and you stake it, and look at that, you got 35% for the first year. It probably goes down based on what I was seeing there, but still, I mean, it's like guaranteed, and on top of the coin's performance, so very cool. Yeah, Mike. So lending, CoinDesk kind of brings it into two different pieces.
Yeah, I mean it's the same branch of the same tree, but
right. But yeah, same kind of concept. So like BlockFi, we're very familiar with BlockFi. I use BlockFi and Celsius. Those websites, we can kind of pull them up just for an example here real quick.
Remember, look down in the comments. We have the referral links. Sign up, get yourself some Bitcoin.
So these are not staking. These are interest-bearing accounts. So similar to kind of how a savings account in fiat would make money, this is kind of the same service. They're going to hold your crypto in their account, but
and they probably
interest.
lend it out.
Yeah, and you get interest. So they're doing things with it that make them money. Therefore, you share the money results on the back
Once
side.
again, and it's not your keys, not your crypto.
Right.
So, you're giving it to someone else. Can banks get robbed? Do things happen? Does BlockFi send random people 5 Bitcoins? Yes, it happens. So,
How do you know that, Mike?
Let me tell you a little story about when I had 5 Bitcoins.
Yeah.
And then I had to send them back.
So yeah, Celsius, very similar setup. I'm trying to get to not my account. But anyway, this is, they do fluctuate in the interest rates based on demand. So let me see if we can go here. Trading account.
But there's some pretty good rates on stablecoins. So, that's where you're always going to get your best rates.
Where do they show the rates at? I don't know. I can't see that. I guess it's here.
Oh yeah, it's worth mentioning the stable coins. A lot of them have pretty high rates.
Oh yeah, for sure. Everybody wants.
I think here they're like 8 to 12% for the most part.
Yeah, and the incentive, the purpose behind it is, they want you to hold them just so that there's, I guess there's just liquidity behind it. Then I guess.
Well, yeah, the more they hold, the more they can lend.
Yeah,
so,
I think that it's easier for them to lend a stable coin than it is to lend a crypto. Like if you're withdrawing, if I borrow from BlockFi, I can choose to borrow in fiat, or I can choose to borrow in stablecoin. And it's easier to not off ramp to fiat if I'm trying to buy more crypto or whatever I'm doing with my crypto. So they want stablecoin to lend to people.
And as this gets bigger and bigger, they're essentially going to start competing with banks, starts competing with, quote unquote, traditional currencies.
Oh, yeah.
Oh, 100%. Yeah, 100%.
Because they're like, we'll give you a 0.02%. And like, no, I'm just going to put all my money into, Cash App, which I can get a routing number and an account number, and I can convert it to Bitcoin. I can dollar cost average in like by the minute, like,
So,
or yeah. I mean, that's just, it's going to be, it's banking like 2.0.
Yeah, the lending part itself that we're talking about right now is not a way of passive income for you, other than participating on BlockFi and putting your money in their hands. So you are getting a piece of those things. Like the actual like lending part is optional. You don't have to borrow from them.
Right. That's just benefit of it. So if you're looking to take advantage of your asset, say because it's rising at a 20%, or to 100 or whatever that year, and then your average cost of operation is less than that, then you can just borrow against the asset, not creating the taxable event and keeping. Yeah, you never want to sell. Well, at least Bitcoin. But.
Right. So like I think Celsius is 6% on Bitcoin right now, which is that's like pretty solid. You put it
BlockFi 4.5.
BlockFi is a little less, up to like 0.1 of a Bitcoin. So they have like different ranges. Just take a look at it and understand it. But those are some good examples. Some of the examples of like non-financial services, kind of like the exchanges, or like the decentralized places. What we have here? You could have things like Bitfinex, BitMEX, BitTrue. Those are all like exchange-based lending on margin. So you're doing kind of more riskier type transactions, but there are ways to use your crypto to make more crypto, make more money.
Yeah, I think it's worth mentioning these lending platforms, and maybe this can be like a different topic or different episode, where you can lend your Bitcoins or whatever, and they'll give you money. Like you can use that as collateral for a loan, which is pretty crazy. Just like you can use your house for collateral,
Well, yeah, I mean, in a world of under collateralized, loans, this is like kind of the total opposite. But yeah, over collateralized and using that to your advantage. Yeah, I mean, it's great.
It's like we were just looking at that the other day for something that we're kind of a project we're working on right now, Mike and I. But if you do it on Celsius, if you do that, you can do, if you're a 25% loan to value ratio of whatever crypto to your loan is, it's like a 1% loan, 1% interest loan, which is like extremely low, up to 3 years. So you can get access to money very easily, collateralizing your cryptocurrency at 25%. They do like 85% loan to value. I think that's their highest one, but then it's like a 10%. It's more of in line with traditional banks.
But
yeah, I think crypto. You could have $100,000 in crypto, not want to sell it, collateralize it, and then go buy something that you have to buy, or whatever you want to do.
Or just have a lump sum of money to just to live.
You got to make it through the year. Or I guess you could go real risky and double down on the crypto that you bought for that, and then hope it goes up. And you got
that's the way to do it.
I mean, I guess you could. It's just you're double dipping.
Not financial.
At that point, you might as well just do leverage trading. As far as risk tolerance,
you probably want to use it for like if you're going to go buy a house, or you're going to go.
Well, and then we've heard recently that now collateralize loans for houses with Bitcoin or through crypto. So right there, like even just owning those assets, then maybe will get you into a new house, a new place.
Yep.
Because people are realizing that, recognizing the value.
Yeah. I think a lot of retail people don't realize you can do things like that. But yeah, I mean, maybe we can do a different episode just on that alone, because I think that opens up a whole new world of what you can do with finances here.
Yeah, Hey, it is. I mean, that's why people are excited. That's why a lot of this money is flooding the space, and it's only just begun. Really, it's still quite still quite low and growing.
Yeah, and one of those, like for Celsius, for example, I think you pay them back, or you can choose to pay them back in their token. So it's almost like their way to buy themselves back. Like it's like a buyback, and you get a cheaper interest rate if you pay them in
Use
their
their
token.
use their coin.
So it's like forcing you to buy their token with the money. So you're holding their token but paying them, and it's kind of, I guess it's a way to it's incentivizing.
It's like win-win for them.
Yeah, pretty much. But
well, when you got the money, that's how you make the money. So you lend it out, and then you make more money. That's like the fractional reserve system. That's why the regular system is just crap, because they're allowing them to fractionally loan out all the money, and no one really has any of it to be able to cover it if everybody was going to take it out. Every dollar that was created is a debt to someone else. So someone owes that dollar back.
Yeah.
Something to think about.
Which they can't do in theory with crypto, because they can't just fabricate it. That's why they need you.
Right. One Bitcoin is one Bitcoin, and it was made because someone put the energy in. They proved the work, and it made the Bitcoin. The Bitcoin was created.
So obviously a big John, do you have any more comments on that, or you want to go to the next?
Well, I think a cool analogy coming out from that is what's happening with these gaming tokens. I haven't really looked much into them, but apparently you can earn some sort of rewards or some sort of tokens just by playing certain games. Yeah. You guys know much about them?
Well, yeah, I mean the Axie Infinity, and I think there's a bunch of other ones out there. They're their own. Some have their own blockchains. Some are based on layer ones that we know, but it's all incentivized because they're saying, hey, if you're just playing my game, you're sitting around playing other games, you can be making money here, and then the value of NFTs within that space, and then keeping those items, finding rare items, those having value, interacting with the metaverse and the world. I mean, yeah, so it's huge incentivization, and there's these people, they want to do it, and then why not sit there and game and make money?
I guess that would be kind of in the NFT collectibles market of passive income, which is very similar to like what people would do you buy a piece of art and you
right. It's just you're trying to store the value. Why not?
There's only one Michelangelo sculpture in the world. As money goes up, there's only going to be one of those. So that the concept of NFTs applies to the gaming side, because you buy things in the digital world and you use
the digital world
for digital in digital land.
Right, and then you can take that and you can stake your NFTs. It's like on Wax. If you look at that, Wax has the NFT staking. Yep.
Right. I think you can. I guess I wouldn't call playing a game passive, I guess, because you have to do something. But I guess it's not necessarily work. It's kind of playing at the same time.
Yeah. I mean, it's
Yeah.
But I think there's
kind of fuzzy line.
It's a byproduct.
I think there's games where you can recruit other people to play the game under your account, almost like a pyramid.
Right, and you're getting paid for it.
Yeah, say pyramid scheme, but you get other people on your team, and then they're making money while playing, which then becomes passive income for you under your group. So I haven't done any of that. I just don't
recruiting other people.
I don't have time to play games right now. I
played Axie Infinity for like a couple weeks, and I didn't play enough. So then the guy was like, I need to take my team back, because he loaned me. I was just like the trainer, and then he loaned me the NFTs, and then because some person in the Philippines wanted to do it to be able to eat or something or have a house, and I was like, okay. I was like, go ahead, bro. I was like, I'm not playing.
Yeah. Was that long?
What kind of game is it?
No, that guy Brett Crypto from eBay, when I bought the SC1 Duel.
Okay,
I just had talking to him, and he was like, hey, you want to be on my team? And I was like, oh, sure. And I started playing it, and I mean, it was fun. But
what kind of game is Axie Infinity? Is it like a shooting game or a strategy game?
No, it's like Pokemon. It's like turn-based, attack, and it's like these 3 guys, they're monsters, and they fight, and then they all have different powers, and you can breed them. So like they make like ultra rare. Some people just breed them and sell them. They used to be like $20 to $30 to like $300. Now a couple of them are like thousands or 700, 600. So you have to actually buy the NFTs to play. So just to get in now is like maybe $2 to $3 grand to get a team, or you let someone, or you're like you just like Adam said, you play for someone else. Someone plays under you, like representing you, making you money, but making them money.
You're the owner
so they're
of the
making
car,
your money.
and they're using it to drive around.
Right, but I mean, so that's someone's job in another country is to play these games to support their family.
Yeah.
I mean, get it, boo. Do it. Any way you do you.
Yeah. People are doing the same thing with like World of Warcraft type games. They would find certain items, or I think you have to like maybe manufacture certain items or whatever. Some of them will be rare items. They can, sell them on eBay.
Right. So I mean, that's kind of like that's like NFTs like 1.0.
Yeah.
Right.
That was 20 years ago.
Right, because I mean that's still in a digital world, and then you like put it on like eBay, and then you just like send it to them at the game. It's like, okay, here you go. Here's your, it's your super axe or whatever the heck you want.
Yeah. Yeah, I mean, savvy people were hiring people from like other countries to like play the game for them. Just like what
and find it and then make the money off it.
Yeah, and some people they would level up a character, then they'll sell eBay off the character. After you're like level 60 or level 30 or whatever.
Yep. So
what's
I guess
next on the list?
Another unique version of passive income is airdrops. Which I think are few and far between. You kind of have to be in the market and the pulse of these a lot of these up and coming coins do this. Some of the established coins will do it. Like I just pulled up airdrops.io. I don't know how legit this website is, but it talks about potential airdrops, ones that that just happened, potentially ones that are coming. But effectively, an airdrop is just like the maker of the coin. Assuming it's a centralized holder has a certain amount of coins for it's kind of like marketing. They just want to send out, hey, to the early investors, the early holders of the community. They just drop 30 coins in all the wallets that are out there now. And
it's like if you've participated in the Web3 wallet stuff, or like some way in like
before December 1st, 2021, you'll get a coin.
There's a stipulation, right? You use the decentralized platform so many times that they're going to drop airdrop you some coins.
But I'd say this is by far probably one of the most I'd say like easiest ways to get scammed too, at least from what I've seen, is like they send you an email saying, hey, you got an airdrop, log in with your MetaMask account.
Right. And then you just gave them your stuff.
And boom, it steals all your Ethereum like outside. So just
that's no good.
There's tons of scammers trying to get people to commit to that. So just whatever you're doing, make sure you're not doing something silly.
Make sure there are ways to think about it.
Right. There are ways to get airdrops from some of these coins if you pay attention. Like here's an example, like claim 100,000 ASK from permission, whatever that coin is. All you got to do is sign up and verify your mail and you get 100 coins. And then you become an investor. So like, who knows what this coin is? Is it even worth it? Like, who knows? But those are the type of things that you could get an airdrop on by doing a Twitter blast, or you're doing like, I think Chris did an airdrop for people that signed up for his Telegram account.
Yeah, or his new V chain or V dollar or whatever. Yeah, V token.
Yeah, V token. So like, they are real.
He said he airdropped like 70 million US dollar. I thought he said.
Right. And I'm waiting on the airdrop right now for that Sunday swap.
Yeah.
Because I'm staking in there's like 30 validators that are officially licensed by Sunday Swap or whatever. If you delegate to them, and then when the token goes live, I'm going to get an airdrop of Sunday Swap in my wallet, which is like I'm just waiting for that to happen. It's official. So I don't think you're going to make a whole bunch of money doing this, but you could kind of step into one of those coins that is a nobody coin right now, and then eventually it gets, could turn into something. So if you're looking for a way to get in, step into some of these coins for free, that's your market. Your passive airdrops.
Take a look.
What do you think are some future potential passive income opportunities?
Future opportunities?
Yeah, just crazy ideas that we haven't thought of yet that might be kind of realistic.
Well, I mean, if you look at the next kind of branch, which would maybe be mining or hosted mining, I mean, Compass.io, compassmining.io, they allow you to host machines, Bitcoin mining machines, at locations around the world.
Oh, wow.
Right. We talk about mining in our garage. It's kind of like nitty gritty. It's kind of loud. It's kind of hot. It's kind of power. You got to deal with it. Like it's not.
There's pros and cons. I mean, you own your machine.
Someone who likes computers probably would love it, but someone who just wants to have a bank account with a lot of money.
A normal person is not going to want to have an 80 decibel fan running 24 hours. Jacking up the power bill.
So let's say I'm an investor and I have $100,000 right now to spend, and I'm like, well, I like the sound of mining. It has all the perks of making money with me doing no physical work, but I don't have a facility to run it, and all those things that come along with owning, that much power, that much security, and all that stuff. So this company, Compass Mining, gives you that opportunity. You can buy one of their miners from their marketplace and send it to one of they handle the setup and sending it to one of their facilities located in America. I think they have something like Russia. But yeah, here's an example. You could buy this. You're buying that product. You're buying this Antminer S17J Pro for $9,900. You can do 100 terahertz, which is pretty good. The best one's 140. But this, you would get it on July 2022. You have a year contract with them to host it, and you pay only the power cost, which is 6.57 cents, or depending on which.
0.06.
Very low.
6 cents.
So then you could drop $60,000 to $70,000 and be making $150 a day. And you don't have to do a thing except for pay it and watch the money come in.
Yep. It just goes right to your wallet.
So these places have, a lot of security. They're often on sites that have generator backup, or they have
some are
utilities.
Some are clean powered. And yeah, they maintain your machine. Once you pay for the machine, you can request it and they'll send it to you. So they are serialized, they're, taken care of and professionally maintained.
Like here's one in Nebraska. They gave you a couple of pictures of it. But I mean, this is truly mining. You could participate in the mining effort, and it's like crowdsourced mining. Like they're taking their little tiny cut of it. They're getting their power cheaper than 0.06, basically, that's the only difference. Like they're probably generating it at like 0.2 or 0.4.
Right. If they have water or wind, it's whatever that. Yeah. I mean, there's a cost.
They're making a small cut, but this is actually half the price that I pay here at my power residentially. So like, no matter what, I'm coming out on top, giving it to them. If I compared to your rig at your house. So yeah, I mean, you could participate in the mining. They have limited, like you can't just buy any miner and send it to them. You have to buy it through them at this particular site.
Right.
They have that'll change. So you are going to be paying. You're going to be paying like reseller value. I mean, you're going to be paying pretty much top dollar for the machines, but sometimes they're new. Sometimes they're secondhand. But like here's a new one, so you can get a new one. It's from a trusted source. It's going to show up. It tells you exactly when it's going to get online.
Right. The sooner you want it, the more money it's going to be.
Yeah, and you can't just send anyone there you want, unfortunately. But at
Yeah,
least that's
maybe
not how
down the
we do it.
line, maybe that'll be
And then you buy it and you say, "Hey, I'm done." Send it. I don't like you guys. You're inconsistent. They'll send it to you, and you have to pay for shipping when you come back. But mining is an excellent way. Me and Mike are doing it. I mean, you're literally making money. We've shown the pictures. We're making money while we're playing golf. We're making money while we're working. It's
right now.
you are subject to all the things crypto as far as volatility. If you're
Yep.
mining at your house, you got to worry about just the upkeep of the machine, and it could fail. What if the coin goes bad? If you're buying a $30,000 machine like a Cadena and Cadena falls off the earth, was that a smart decision? So all those things, you're definitely spending a lot of money to make a lot of money up front. This, out of all the things we talked about, this is the most expensive way to do it.
Probably so, yes.
But
it could be
it's also
one of
the
the
most rewarding. It's most rewarding.
over the time, yeah.
For sure, hands down. I mean, that's why you're also participating in the network. We all love Bitcoin. Yeah. We all love, if you love Solana, or Solana's not proof of work, but you love CKB, you love Bitcoin, Litecoin, any one of those, you are physically running the transactions, you're pushing them through the block. So it's kind of cool in the sense of you get to participate.
Yep. Check out mining. If you have any questions, let us know.
We've looked at it like 100,000 times, but I guess we let me just show it real quick before we close that thought. ASICminervalue.com. If you want to know what miners are out there and roughly at that moment in time what profits they're making. So you can see you could go all in on this new KD6 from Gold Shell that just came out and make $230 a day at this moment. It was probably making $500 a day, back in
like November, October.
So prices are wild and fluctuations, just like the coins going up and down. But this is a good site if you just want to be like, hey, what's it look like? Where do I get it? What's it cost? All those good things. There's a lot of good data here on this site. So Ethereum, we'll say that Ethereum is going proof of stake, maybe by the end of the year. So
careful with that one.
Yeah, you gotta consider what you're buying and the coin's long-term plan. So
buy the rumor, sell the news. Did you talk about the dividend earning tokens?
No, I didn't.
Well, I mean, it's just similar. You're staking your tokens. Some exchanges and places will just pay you for holding their own, their coin. So it's just
kind of like BNB. I think if you hold BNB, if you hold Crow, there's ways to make
Crow. Yep.
Right.
They give you other incentives, right? They give you better rates. Nexo, same thing. If you operate in their coin, you get a certain kickback. So yeah, I mean, it's just
like less fees. If you're a big trader, that's a good way to go because you're going to be
You can pay in the native token.
If you're a VIP member on BNB, you don't have to pay all the trading fees for whatever, and then you end up you make money by not spending money, I guess.
Yeah. Yep. Or allows you the extra access to different features or whatever on their website. Crow has the credit cards and all that stuff. So
makes sense. It does. Oh, we lost John.
Oh no. And then yield farming. So earning passive income via a system where you inject some liquidity, which then will be loaned out, and then you're owed a certain percentage back. So oftentimes this is the one of these ones that will there he is. He's back.
How's my video?
One of the more riskier
still
ones.
Matrix mode. Yeah, I mean, so yield farming, I guess, is similar, very kind of similar to the lending concept that we had earlier, but more probably in a decentralized format, strictly governed by smart contracts, I think.
Yeah, I think for the most part.
So I think there are some exponential ways to make a lot of big money there, but it's also comes with a little bit more risk than I think some of those other ones that we talked about. So, not
It's like
financial,
throwing your money into a giant pool. Here you go.
right? Don't
It's
get.
like, I hope it comes
rug
back.
You just got to be smart. I mean, like what we say this time.
Yeah, do
like,
your due diligence.
find out what
Research
this
the
is.
stuff.
The website, is it some dum dum in Russia? Like, no offense to our Russian commenter, but is it some guy in Russia like trying to steal your money, or is it like a real website? And if you do send it, maybe test it for a couple months, see how it works. Don't
Right.
mortgage
Find
your house.
People
And
have
send
used it before, or
Right, exactly.
Cool. I guess before we log off, why don't we? I was gonna say, why don't we rank all the different passive income methods from like safest and most reliable all the way to like I guess the most wildest.
Right, risky. And then we also need to talk about our fantasy draft update.
Oh shoot, yeah, we didn't
Oh,
get
right.
that. We get an update.
So why don't we go from riskiest to safest, or what do we want to do? Safest to riskiest?
Let's go safest to wildest, mildest to wildest.
Wildest to wildest. So I'll take the first spot, which I believe would just be the network staking. I mean, that's / dividend coin. It's like you either own the coin, or you're just pointing your coins, the value. They're not leaving your wallet. You just set it and forget it.
I don't know. I would say the stable coin interest would probably be the safest. What do you think?
I think those are very similar things. Like you're making. Well, let me take
the risk tolerance on the ladder is higher because you're actually inputting that. It's leaving your wallet. You're sending it through the network. Yeah. Someone else is holding it for you, not your keys, not your coin. So I would say that there's a little bit more risk there.
That is true. Yeah, I think the BlockFi, the Celsius, the stablecoin, the earn and lend programs, it is leaving your wallet, and that is not
sent 0.1 Bitcoin to them. Right, I don't have that in my possession. Right.
If they send it to somebody and that person walks away with it,
well, yeah, they're gonna have insurance for it, but still, it's just like. If they shut down, what if it's like one of the Mt. Gox things where it's like, oh, this is a great exchange, everyone's hunky dory. Oh, this guy just rug pulled his whole company and left with all your coins.
Celsius CEO just goes to
the moon,
Bermuda Triangle, and money with him. So I mean, yeah, I would agree with Mike there that staking.
So I mean, it's not the wet blanket, but it's right.
I think that's definitely the next level up. Maybe tied with collectibles, like the NFT part of that. I mean, the NFT, as long as you're not doing anything funky with it, or if you believe in obviously the volatility is your risk in that era, but the risk of losing it or your value,
right? Either buying
in air is low,
right? Yeah, buying is like
buy the right value.
random thing that you thought was going to be a 1 of 1 or a 1 of 500, and it's just it turns out to be nothing. It's just another digital scrap or
something. We talked about, I guess, the borrowing part where it's the other side of the BlockFi where you can use your crypto, collateralize it, and then borrow. I think is pretty high up on the risk scale, I guess, because one, it's leaving your wallet, and then you have to do the right decision on your own financial borrowing side. Like, what are you using that money for?
Right.
If you go into a hole and you lose your collateral, you're collateralizing your thing.
Right. Or if you're directly peer-to-peer lending it.
You could lose your money that you borrowed and the money that you
right. Or if you're margin lending it, you get liquidated.
Yeah,
there goes your stuff.
So that's probably next. And then I guess
mining
is risky.
Is probably I would say the 4 out of 5 if it's a bit out of scale. You do have an asset in the ASICs, but the coin fluctuates. More people coming online usually means less of the pie that you're going to get. Difficulties for the network is depending on how many people are mining and how quickly the blocks are coming in. So, we're kind of experiencing something like that. When we purchased the miner, it was making $140. right now the miner's making 75. We knew that could be a possibility. But yeah, it comes with its own risks. And depending on if you're running the stuff yourself, there's also physical risks to your property. If something happens, you overload a circuit, you do something wrong, there can be fire, there can be, there's
Downtime is no money.
downtime, right? No power. Hey, we're here. I got miners out in McLean that have no power and they're just sitting there. So there's nothing I can do until the power comes on. So, but yeah, that would be one, like either 4 or 5. I mean, it would kind of be one of the riskier, along with the yield farming,
Yeah, the yield, like decentralized DAO,
finance. Yeah.
smart contract to yieldy farming, that kind of business. I think
Still
it's definitely up there.
Yeah, the forefront of that, it's just coming around. You're only good as your contract, really do your due diligence and find out, because it's tempting. You see, 200%, and you're like, man, why not I just throw like 15 grand in there? And then it's just like, whoop,
They're making 200% because whatever they're doing with it is on the risk side. So.
Right, it's very risky, right? They're margin lending it out to someone else who's like lending it out to someone
trading
else.
bot
Like,
that's making money
right.
or something.
Right. They're like, you didn't set the bot this morning? No. But yeah, so figure out which one's good for you and just commit to it, make a plan.
All right. So, John, that was a good idea to just summarize all of that. If you guys have any questions, leave a comment. We can try to answer you, help you out. So, Mike, I'm going to need you to call out the coin values here if you can.
Okay, here, yep.
I put in the inputs from last week right after our show. So these are where we started. This is a couple days ago. I put in the value, so we kind of see a preview of what we're working with for this week. But go ahead and give me the numbers for.
Okay, so Ethereum 3806.87. I don't know if you want it down to the.
Yeah, you don't need to go that.
So $3,806.
Yep.
Bitcoin is 46,381. And then you're looking for what? Avalanche?
105.8. So that dropped compared to this week and last week. Solana 168.72.
I'll do Sheeb. Sheeb is 0.403265.
So, John, you are down $500.
Man.
All right.
I mean, pretty much the way the market's been, so I don't blame you. But you did try. You didn't have any massive losses, so that's
Yeah, I was. My strategy was to pick kind of safer coins.
Yeah. So I think, not bad for a $10,000 investment. And you're only down 500.
You're safely losing.
All right. So Mike,
right, so Luna is $85.28.
So that was up. It was up 7%, and then it kind of fell back down. So could have made a move. So Crow.
Okay, Crow is 55 cents.
Okay. Mana.
That's my next one. Mana is $3.22.
And here's your winner. MetaPets. You got to count how many zeros. I think it's 9. 1, 2, 3, 4, 5, 6, 7, 8, 9.
Did you find it?
No, I just know it because I typed it in before.
Let me pull it up here. I think I got it right here. It is. It just has dots. It has .0 and then ..
907878262.
7844. I have 7844.
So it went down 20% since I did it the first time. So you're up 70% now as opposed to 90.
Not bad. I'll take that.
70% gain. I mean, hell, I looked at how to even get MetaPets. I was like, I couldn't even figure out where to get it. So
then what? Phantom.
Yeah.
Phantom is at $2.96.
All right. So that's up 30%, Mike. So yeah, you hit two good ones right there. All right, Polygon.
Matic.
Yep.
It is
2.468. So that's
240. Yeah.
Sandbox.
And $5.51. KDA.
Damn, that's down 10%.
$10.99 for KDA.
Oy, man, I'm getting killed.
CKB.
That one's like 23. I think that went up.
I don't think it's on the top 200.
247. So that's basically did sideways. And Ant was up big. And then now it's kind of back to where it was.
Now it's small as its name.
So I'm the biggest loser at $700 lost. And biggest loser was Cadena, which is.
So I gained 1,500. You needed a line.
If you're a Cadena miner, you're gritting your teeth right now. But Sandbox didn't do well. Polygon kind of regressing a little bit with the market. So yeah, I had the biggest loss. Mike had the biggest gains. He's up $1,500.
So yeah, hey, I see a one called Shiba Dollars. It's up 300%. Shiba.
Right, so we'll continue this into week 2 and see how things move. I think we'll have up or down. We'll have a lot of movement here next week. I think either one.
Pretty fitting. I mean, I won my fantasy championship yesterday. So.
There you go. Congrats.
Yep. Not financial advice.
Last time we did this, John made a whole bunch of money in the crypto world, but he didn't buy the coins that he said he was going to have.
Right.
Yep. So is this your moment to be like, hey, maybe I should buy some Phantom? That made 30% last week.
No, I mean, it's definitely on my radar. Phantom, Crow, and Luna. So, I mean, those are kind of relevant to my just looking at them or researching them, keeping an eye on, see where they're going.
So. All right. Well, good stuff.
Let's wrap it up.
Yeah, this should be about the time. Thanks for listening. Thanks for tuning in. Like and subscribe.
Do we know when we're giving away the million Shiba?
I mean, let's just set a mark.
I'm saying, let's give them something.
Let's say
we're airdropping.
Airdrop it to somebody. I'd say by the Super Bowl, which is like
Super Bowl weekend.
Super Bowl weekend Shiba drop.
Shiba drop.
Which weekend is that?
It's like usually it's like February 5th or something.
I think it's one more. They added a week. I think it's like the 13th, maybe something like that.
Okay, so mid-February is the time. So still got time. Like, share, subscribe, comment below, and share it with a friend in that comment, and you'll be on the list. And maybe million Shiba will be worth a little bit more than what it's worth.
$35.
$35. All right, good stuff.
All right, everybody. Roll the tape.
Roll the credits. Hey, remember I closed the thing last time?
Yeah.
Oh, yeah. All right, y'all. Till next time. Peace.